Hi there, welcome to Kneppy Invest. I am not a long-term mining company investor. I will never put my money into a company like BHP, Fortescue, Gascoyne Resources for the long term. And the simple reason behind that is most mining companies are price takers, if not all of them are. And that means they have no say in how much they sell their product for. They just have to go to the market and see what the market is willing to buy their commodity for. And almost always, the price of a commodity is quite cyclical. It goes up and down, and the movement in the commodity price is determined by supply and demand. And if the price of a commodity is high, just like we're seeing with iron ore, that will mean in the next few years there will be a flood of iron ore coming into the market because there's going to be all these mining companies who see these high iron ore prices, who want to take advantage of that and don't really care about the overall market itself. They just care about making a lot of money in a very short period of time. So they will flood the market with iron ore. So we'll see iron ore supply increase over the next few years. And if there's not a subsequent increase in demand, the iron ore prices will fall off a cliff eventually, because these sort of prices for iron ore are not sustainable for the long run. So that's the main reason I try to stay clear of investing in mining companies for the long term. Now, you could tell me that there are some major mining groups like OPEC who do have a little bit of a control in how much the underlying commodity is being sold. And that actually is true, because OPEC can limit the supply of oil entering the market. But it all comes back to supply and demand. And most individual companies cannot affect the supply and the demand of the underlying commodity they are selling. Now, in the short term, this is a little bit different, because you do have situations where there are some companies who are in production of a commodity and they are quite undervalued. And the company I'll be talking about today, Gascoyne Resources, it did seem like Gascoyne was undervalued because they were producing prodigious amount of cash in their production. However, there is one thing mining companies do have control over, and that is the amount of money they spend to get the commodity out of the ground. And unfortunately for Gascoyne Resources, the one thing they did have control over, there was not some good news they released in regards to that a few months ago, and the share price decreased 50% because of that bad news. So let's get into Gascoyne Resources and talk about this company and see where they're heading and where they've been. Gascoyne Resources is a gold company, and I've done a few videos on this company, well, at least one video on this company in the past. It was an attractive value play for me about 3 or 4 months ago after their March quarter results. However, some negative news flow between March and the June quarter results did give me the incentive to sell, and we did see the share price fall 50% in that period. Ticker GCY, market cap of 79 million, and when you compare the market cap or the enterprise value to the operating cash flow, which was 75 million in the trailing 12 months, you would say this is insanely cheap at these current valuations, because the enterprise value to operating cash flow is only 1.25. Personally, anything less than 6 with the EV to operating cash flow is a value play, and this is 1.25. But in these sort of situations, you do have to be careful of value traps. And value traps are those situations where a company does seem cheap or look cheap, but there is a reason why it's looking cheap. And with Gascoyne, the main reason it's looking cheap is because of that news flow they released over the past 3 months, which I will touch upon in the next few slides. And that operating cash flow of 75 million in the last 12 months will more than likely be significantly lower in the next 12 months. And the market is always forward looking, and it knows that operational cash flow is going to be lower. And that's why we have a market cap of 79 million and an EV to operating cash flow right now of 1.25, because more than likely that ratio will be significantly higher, and because that operational cash flow will be significantly lower in 12 months. And that's why this seems like there is good value right now, but more than likely the value is not quite there. Before we focus on Gascoyne's June quarter results, I just want to go back to the March quarter, see how this company was performing the first 3 months of the year, and then see how they progressed in the next 3. And also to show you how I initially became excited in this company. It was all based off these results. Receipts and customers in the March quarter, 48 million. And for the first 9 months of the year, they had receipts of 158 million. And now operational cash flow positive for the quarter of 28 million. And for the first 9 months, 65. So I looked at the amount of cash this company was producing in operations, compared it to the value of the company at that point in time, and went, there could be some good value here. Not only that, the cash decreased from 37 to 27 million, but the main reason cash decreased was because they repaid $19 million of debt, and that's very important to me on a personal level. I like to see companies repay down or pay down the debt as quick as possible. I don't like companies with too much debt. They also spent $17.6 million on capital expenditure. Some companies will break down capital expenditure into growth and maintenance. Most companies don't. So more than likely, at least half of that, and this is just assuming, half of that was for growth initiatives, and the other half was for maintenance reasons. So this is the main reason I became interested in Gascoyne, and the reason I took a position in this company just after they released these results. Unfortunately, my position in Gascoyne Resources did not last long. I sold out soon after I bought in, simply because there was some negative news flow from the company, and based off this news flow, I decided to sell out. And it was unfortunate because the share price of the company fell off a cliff. In fact, it fell off something like 50% from when I bought in. And you can see the effect of this negative news on the operating cash flow for the June quarter. Receipts and customers, 42.3, so it only fell a little bit, but the main effect was on the operational cash flow of their operations, falling from 28 million to 9.8 million. So that's a significant decrease, and that did affect their capital expenditure for the quarter, falling by quite a bit, down to 7.6 million. And I would say, and this is just assuming, that most of the capital expenditure was for maintenance reasons, not growth reasons. One tick for Gascoyne was they did decrease their debt even further, and it is now down to 14 million. So that is one thing positive going for this company moving forward. The negative news flow in regards to Gascoyne was all about their cost of getting the gold out of the ground, and they've increased their guidance, and they also issued some financial year 22 guidance as well, and it seemed like it was really high compared to the previous financial year of 21. In the half-year results, they did give some financial year 21 guidance, so costs were more than likely going to be between 1,200 and 1,300. When they released some news flow on the 4th of June, they increased their financial year 21 guidance by a little bit, not a lot, but they also gave out that financial year 22 guidance, and that, I think, was a major reason we saw the share price of Gascoyne tank over about a 3 or 4 week period. The June quarter costs were at 1,589, and we can see the effects of that increasing cost on the cash flow of the business, decreasing by a significant amount quarter on quarter. And for the very fact that the financial year 22 guidance of costs is between 1,600 and 1,700 is a concern to me and to the market. And that's the major reason the share price in Gascoyne has taken a massive dive over the last 3 to 4 months. I will only show you the daily chart for Gascoyne, which goes back to November of last year. One of the first things that did get me interested in Gascoyne was the slowly developing uptrend between January and May of this year. You can just see the share price going a little bit higher, higher highs and higher lows. It wasn't until the 31st of May there was a one sign of a shift in sentiment. That was when they released their mineral resource and ore reserve statements. Share price went down 13%. Did find a little bit of support at around 52 cents or so. But it wasn't until that 4th of July announcement about their financial year 21 and financial year 22 guidance update where the market decided to sell down Gascoyne. On that day, the share price fell 19.4% and has been falling ever since then. And the share price right now is around 30 cents. We have seen a bit of stabilization in the share price of Gascoyne. They also announced a merger with another mining company called Firefly. That could potentially have put a bit of a limit to the fall in the company's share price, because if I remember correctly, Firefly has much better margins in their gold production, so potentially that's why Gascoyne is or wanted a merger with Firefly. So share price is going sideways, potentially consolidating right now. If it does fall any further than 30 cents, that would be a concerning sign. And if we do see a new uptrend, say share price moves above 35 cents, that would be a good sign as well. My only concern with Gascoyne here or moving forward is their guidance for costs in financial year 22. If that was significantly lower, valuation of this company right now would be awesome, but it's not. They are expecting much higher costs in the next financial year, and that's why the share price has taken a massive hit, and that's why the market cap of Gascoyne is around 70 to 80 million right now. I still have many videos to do to achieve my mission of covering every single company that achieves an operational cash flow positive June quarter. So look out for the following videos on these 4 companies in the next few days. SKS Technologies, a company I know very little or nothing about. EOS, Electro-Optics, one of my favorite companies on the ASX. MSL Solutions and BetMakers. And in fact, BetMakers is looking much more attractive to me over the past few days. So have a look out for that video, and I'll be talking about why I'm more interested in that company. That is all I have for this quarterly cash flow report for Gascoyne Resources. If you have any questions about this company or any other company on the ASX, I'd love to hear your thoughts. I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.